Hey everyone, welcome back to Corporate Decoder, the place where we try to figure out if companies are telling us the whole story or just the part that sounds good. Today, we're diving into a fascinating filing from Xcel Energy Incorporated that gives us a peek behind the curtain of their subsidiary, Northern States Power Company of Wisconsin. So, what is the big news? It is all about a recent rate hike request for their electric and natural gas customers that just got a verbal nod from regulators. Think of it as the company asking for a bit more from your monthly bill, and the state saying, mostly, yes. Now, this isn't just some small tweak. The company, Northern States Power Company Wisconsin, which is a part of Xcel Energy, had asked for a multi-year increase to their rates. They were looking at what they called 2026 and 2027 as test years for these new rates. They wanted a 10.0% return on their equity, which is basically how much profit they aim to make compared to the money investors have put in. And they wanted about 53.5% of their funding to come from equity, meaning loans versus owner investment. But here is where it gets interesting. On the 6th of November of this year, 2025, the Public Service Commission of Wisconsin, or PSCW as they say, gave a spoken decision. It wasn't the full 10.0% return on equity they originally asked for, but they did get approval for a return of 9.8%, and their equity ratio is now expected to be 52.5%. What does this really mean in dollars and cents for customers? The company figures this will mean about a $126 million increase for the electric utility spread out over 2026 and 2027, and an additional $22 million for the natural gas utility also in those years. So your electric bill will likely go up and your gas bill will too, but maybe not as much as the company initially hoped. Let's look at the numbers themselves. The company initially asked for a total of $151 million for electric and $24 million for natural gas over those 2 years. The PSCW's decision brings those numbers down. For electric, they're approved for $126 million. For natural gas, it is $22 million. So why the difference? The table here breaks it down. Some adjustments for things like capital investments, meaning money spent on infrastructure, they reduced the request by $8 million for electric and $1 million for natural gas in this category. They also adjusted for concerns about the rate of return, cutting the requested amount by $7 million for electric and $1 million for gas. Operating and maintenance expenses, essentially day-to-day running costs, were also trimmed from the request by $5 million for electric and $1 million for gas. There was also an update on nuclear decommissioning accrual, which sounds fancy, but basically means setting aside money for the eventual shutdown of nuclear plants, leading to a further $6 million reduction for electric. On the flip side, there is a bit of good news, or at least a smaller increase, coming from excess liability insurance recovery, adding $4 million for electric and $1 million for gas back into the approved amount. And then there are some other minor adjustments. The final written order from the PSCW is expected in December, with these new rates taking effect in January. So get ready for those adjustments on your utility bills starting next year. Now, while this filing is primarily about regulatory proceedings, it is always good to see where Xcel Energy Incorporated itself is positioned. They are a major player in the energy sector, providing electricity and natural gas to millions of customers across multiple states. This particular filing focuses on their Wisconsin operations, but it is part of a larger picture. Their common stock is traded on the NASDAQ under the ticker symbol Xcel, and they also have various debt offerings like their 6.25% junior subordinated notes due in 2085, which trade under the symbol Xcel. This focus on regulatory approvals and rate adjustments highlights a key aspect of utility companies. Their profitability is heavily influenced by the decisions of regulatory bodies. Unlike a typical business that can simply raise prices to meet demand or cover costs, utilities need explicit permission. This can create a slower, more deliberate path to financial growth, but also provides a degree of stability as essential services are always in demand. As with any corporate filing, Xcel Energy Incorporated is quick to point out the risks and uncertainties involved. They're talking about operational safety, commodity prices, rising energy costs, workforce availability, changes in regulations, credit ratings, economic conditions like inflation and recessions, the cost of capital, and even things like geopolitical events and cybersecurity threats. This is a standard disclosure to manage expectations and protect themselves from lawsuits if things don't go as planned. They are specifically mentioning concerns about the impacts of epidemics, business restrictions, workforce shortages, and supply chain constraints. Now, for my take on this filing, Xcel Energy Incorporated, through its subsidiaries like Northern States Power Company of Wisconsin, is clearly navigating a complex regulatory environment. The core of this report is about getting approval for rate increases. which is essential for utilities to maintain and upgrade their infrastructure and achieve a reasonable profit. While the company initially sought a higher return on equity, the approved rate, while slightly lower, still allows for increased revenue, which is positive for their financial health. The fact that the PSCW is allowing these increases, even if they moderated the amounts, suggests regulators see the need for these utilities to operate profitably to continue providing essential services. The risks they've outlined are significant and are common to the energy sector. Geopolitical events, climate change, and economic downturns can all have a major impact. However, as a provider of essential services, Xcel Energy has a degree of resilience that many other companies lack. People will always need electricity and natural gas. The primary challenge will be managing costs efficiently, dealing with evolving environmental regulations, and ensuring they can attract and retain the skilled workforce needed to operate their complex systems. Looking ahead, the key for Xcel Energy will be successfully executing on their operational plans, managing capital expenditures wisely, and continuing to build strong relationships with regulators and customers. The approved rate increases, while not as high as initially requested, provide a clearer path forward for their Wisconsin operations. Alright, that is our breakdown of Xcel Energy Incorporated's latest filing concerning their Wisconsin subsidiary. What is your take on these rate adjustments and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.